Dearest guests, please take your seats as we're starting our next panel, Mixed Signals and Micro Developments to Watch Out For. Our senior analysts will explore how global events and central bank policies impact investment opportunities. Please welcome our moderator, Hormoz Faryar, Managing Director of ATFX Connect MENA, who will introduce his panel. Hormoz, the stage is yours.
Thank you so much. Hi, everyone. We've got an excellent couple of panelists who know a lot about the economy in Africa and everywhere else as well, but we're going to try and focus on Africa. My name is Hormoz Faryar. I work for ATFX here in, we have a big office here in Cape Town, and I'm based in Dubai. We're a global broker, as you guys know. We're the sponsor of this hall as well. So I'm going to let the panelists very briefly introduce themselves about what they do and their experience. I'll start with Shannon, actually.
Ladies first.
Yeah.
My name is Shannon Bold. I'm a macroeconomist. We focus on the South African economy at the Bureau for Economic Research. We do forecasts on major macroeconomic indicators. We also do some scenario analysis, and we also do surveys at the Bureau on a lot of sentiment. So we measure sentiment at where I work. In previous roles, I worked at the Public Investment Corporation and the National Treasury, so I can bore you a bit about structural reforms while we sit here.
Excellent. Peter.
Hi, everybody. I'm Peter Skerritt. I retired from my job as an Uber driver 3 years ago, and I've since made $10 million day trading foreign exchange.
Wow.
I'm Peter Skerritt, working for Peter Skerritt Associates. We're a wholesale market training company. Training, not trading. We train all the banks across Africa and the Middle East for compulsory vocational qualifications to be traders in FX, in other markets, derivative markets, which are mandated for people working in wholesale, large banks and other institutions.
You're in training, but you used to be in trading, no?
I used to be trading when it was someone else's money that I could lose. I've never taken a trading position on my own account. It was always a bank's balance sheet and all of the other advantages that you have when you're sitting on Wall Street and you're seeing billions of dollars of flows happening in real time rather than sitting at home with a delayed feed on the internet in your spare room. Very different environment.
Peter, if you want to trade your own money one day, come to us, ATFX, Linton over here. They can take care of your account.
Excellent. I'll bear that in mind. Thank you.
I'm going to start with the first question. It's about the Rand, straight to the point. What do you guys think about the Rand and its performance? How is it going? I'm surprised. It's done so well the last couple of years, but what's your thoughts on the Rand right now and where it's heading? Shannon?
Well, I think it's actually
I'll start with you then, Peter.
If I may, I think it's done terribly. It depends on your horizon, depends on your time frame. I arrived in South Africa in 1994, and I remember the exchange rate was 3.18 Rand to the dollar. So in terms of that horizon, it's done actually very badly. But no, more recently, we're talking really the last few weeks, the Rand has made fairly unexpected, remarkable gains, not just against the dollar, but against other currencies, G7 and even emerging market. We're looking at, about 6% strengthening of the Rand against the dollar in the last 4 weeks. The Rand can weaken 22% in a day. So I don't believe one swallow makes a summer. What are the reasons why the Rand has, against the trend, strengthened? And not just the Rand, but the local bourse, the local equity market, the local bond market, all have posted impressive gains. A lot of commentators have been wrong-footed, myself included, with the pending election and all the uncertainty around that, and a number of other factors. It is welcome news, but one swallow doesn't make a summer. And what has really changed? I don't actually see that there's a structural change that really merits that re-rating. Of course, on the global side, we've seen in the US signs of slowing down of inflation, which are good. for high-risk currencies. As we know, if US rates come lower, it increases the premium of investing in rand. Other factors, corporate action. We know that some South African companies are now in play, whether it's multi-choice or whether it's Anglo. What are the effects there? We've seen buying coming from offshore of those equities. Other factors, abeyance of load shedding. Japanese housewives.
Are they buying rand?
Japanese housewives have been cited as one of the biggest retail participants in the South African rand market. Mrs. Watanabe, as they call them generically. That's something that if you're interested to read up on how retail traders can actually influence markets. Investec, we all know Investec Bank, they actually launched a fund in Japan a number of years ago, specifically permitting you to engage in what we call the carry trade. Rather than put your money in yen deposits and earn 0%, earn 8 or 9% in the rand. So maybe it was the Japanese housewives waking up to the attractive yields on our local assets. You know, if I can just finish by saying, be careful, those of you who want to trade markets. Be careful about a lot of things, as you know, but trying to always attribute cause and effect unambiguously. I remember the biggest ever market dislocation that happened in my career as a young trader. I was young once. Back in 1987, the American stock market fell 23% in one day. The biggest ever fall in the American share market.
On a Monday, right?
It was, yeah, the famous Black Monday, as it was called. And they set up a commission, the US Secretary Robert Brady, as he later became. Actually, there was a commission set up to investigate how can the whole American stock market fall so precipitously in one day. And the result of that commission was, well, we don't really know. And there were lots of theories, portfolio insurance, technicals, market overheated, all the usual stuff. But the biggest ever dislocation in financial markets, or at least equity markets, in one day, we still don't know conclusively what triggered that massive sell-off.
What's the biggest move ever, Shannon, in rand? Do we know? Is it like 20, 30%?
22.9%.
Oh, is that what it is? Okay, so when you said it could happen, so could
Was that Nenegate?
December the 14th, 2001, the rand weakened in one day 22.9% against the dollar.
That's the highest ever.
Yeah.
That's never going to happen again.
Yeah, no, so I think Peter's covered it very well. I think from a macro perspective, if you look at the rand against other emerging market currencies, we obviously have a lot more idiosyncratic risks priced into the rand. I think apart from the elections that everyone's looking out for, I think public finances is another major concern for a lot of investors and traders that's obviously going to also get priced into the rand. It is a very volatile currency, and we do worry about it, especially when we look at what the rand does with the oil price and what that means for our inflation outlook.
Is oil price more important for rand than...
No.
The gold
just
should
together.
Yeah, I'm wondering whether
been
rand is quite strong.
Yeah.
Is it because gold is doing well? Maybe? Could be, right? Could be because gold is doing well.
I think so. I mean, since I've been in the country, the importance of gold as an export and a forex earner for the country has declined. But I think the latest figures that I can get hold of, it's still around about $24 billion. Now, we all know, multiply that by 18 or 19, and it's a huge number. It's still a significant earner for the country. Platinum is about another 20 billion. So when you add up the effect of a 10%, 15, 20% appreciation in those precious metals and other minerals that we export, do you agree, Shannon, it is a big factor in terms of our revenues as a country?
Definitely. It's very supportive of our current account deficits. That we are expecting to look even worse in the coming years because of the commodities. That's not going to be as supportive to the outlook as it was in the past. We know when the gold is doing really well, we do well on our exports, but it's not something that we expect to continue, especially from our viewpoint.
Okay. And if you had to choose, where the rand is by, let's say, end of the year, would you say it's possibly weaker or stronger?
I'm hoping for stronger. The last time I looked at the models, we had a we had a Q4 average of about 1860.
So you don't think it's going to get much weaker?
No, basically just moving sideways, but slightly stronger. It really does help overall for us.
Buy on the dips. As we say in the markets, buy on the dips.
Buy dollar rand or buy rand?
Buy dollars. Buy dollars on the dips. And let's put can we just have a little show of hands
sure.
here? Could you put your hand up if you think that the dollar rand exchange rate can continue to move down? In other words, the rand strengthening significantly from these levels. Who is still bullish on the rand?
Yeah, who believes the rand is going to do well? We have a couple of hands, I think. So rand's going to do well. There's a few. Look, there's a 4 or 5. Yeah.
Okay, just to make sure that some of you are not sitting on the fence, who thinks that the most likely 10% move from here is up? Put your hand up. The next 10% move, will it be down or up?
So who thinks rand's going to get weaker?
I don't see what's changed fundamentally. Geopolitically, macroeconomic on a global basis, yes, there are factors. Maybe there is some corporate actions. Technicals. A lot of you follow technicals, so forget all of that fundamental stuff anyway. The rand for many, many months has...
Fundamentals.
Sorry, Shannon.
Fundamentals, forget it, let's go.
I'm being devil's advocate, but the rand has failed to consolidate dollar rand above the 19 level for quite a long time now. So purely on a technical perspective, then the downside beckoned, and we have broken some key supports in dollar rand.
So best case scenario for rand. What would be the best case scenario for rand strengthening? Great politicians, great election. You need all that, right? What do you need? You need great exports.
So locally, sure, all those things, but I think a big driver of the rand is obviously what's happening globally. So we're looking at the global inflation and interest rate outlook. What would be great for the rand is if the Fed could start cutting their rates a lot sooner, like everyone was pricing in at the end of last year. The more that gets pushed out, the longer the rand is going to have the sustained weakness, because the dollar, conversely, is going to be very strong. Locally, I think, sure, we have the elections coming up next week, but nothing has to be announced immediately. We'll know the outcome of it, but the president will only legally need to be elected by the middle of June. Then he still has to elect his committee, and then policies are only going to be put into place. So if we're looking at local things, local positive news, we're going to wait a long time. I think we need to hope for some global movements.
I totally agree with Shannon. I'm always amazed the extent to which global developments affect the rand. The rand is one of the most traded emerging market currencies in the world, we know. Our financial system is absolutely world class. It competes with even so-called developed economies. So therefore, we do tend to go with the herd, and we do tend to be seen as a leading kind of emerging market currency because of the ease of access. Remember, all of us locally, we have exchange control regulations. Foreigners don't. Any non-resident can come to Johannesburg and openly speculate in the rand, and that's why they do. So we are dragged along, up or down, by global developments, far more than I think is sometimes justified given our local challenges. But I agree with Shannon, that is a factor that we cannot underestimate.
Okay, what does generally the rest of Africa need? And also, I wanted to run by you guys, like, South Africa's growth, GDP growth, compared to other countries. Like, has South Africa had, let's say, 20, 30 years, has it grown faster than other economies? I heard there are some amazing economies in the Southern Africa or Africa in general.
Yeah, the African dialogue, you cannot be general. You've got some amazing stars out there. The East African economies, up until the problems experienced in the last several months, but in general, the East African tigers, we always used to talk about the Southeast Asian tigers, with their amazing growth over sustained decades. But we talk about the East African tigers, Rwanda, Botswana, you have to really look and see. South Africa, I think our GDP last year in dollar terms, the gross domestic product of the country in dollar terms, was pretty much where it was in 2010.
So which country, Shannon, what's your view? Which countries are like doing well?
Doing well. well, not us.
No, but
Not South Africa.
yeah,
So
maybe.
South Africa used to be one of the big players, but I think we've missed out on a lot, and that's why structural reforms are so important for South Africa. One of the pillars of structural reform is harnessing the strength on the African continent and also with our regional trading partners locally. And to do that, we have to focus on infrastructure with our trading partners and our neighboring countries. I mean, these structural reforms were spoken about since the 90s, though, so it's nothing new. But I think if we really can harness on those things, we can actually play a little bit of catch-up on where we need to be. We need more growth to absorb all the unemployed people in our economy.
So by the way, at the end of this panel, I might have time for 1 or 2 questions. If you have any questions, get them ready. So I wanted to go back to sort of gold prices. So gold prices have gone up massively, record highs in the history of mankind, priced in dollars, highest gold prices ever. Surely that impacts mining businesses. Peter, what do you think of the mining industry, unemployment? Surely you guys are going to get amazingly much less unemployment because of all this.
I'm not so sure that it will translate directly into employment gains, but I saw a disturbing headline this morning in the media that, yesterday actually, the Reserve Bank, the South African Reserve Bank, estimating that carbon taxes, and we are not very compliant, we're not the only ones, but with all of these new prescriptions in terms of climate emissions, etc., but it would reduce our exports by 10%. So on the one hand, yes.
So what's going to reduce the carbon
imposition
taxes?
of carbon taxes, because South Africa is so uncompliant with global norms regarding emissions, etc., that our exports would decline by 10% if we are subject to what is currently proposed as global carbon taxes on exporters.
Wow.
So it's a double-edged sword. So the gold price goes up, it incentivizes us to mine more, etc. But what will be the knock-on effect? That's the issue.
Okay.
Shannon, that's probably something you know a lot more about, is our compliance with these international regulations, etc. I think we're behind the curve, aren't we?
I think we are, and I think we're going to stay behind on the curve for quite some time. We're just going to keep kicking the can down the road, as we generally do. I don't want to sound too negative, though, but on the gold price, we know that we had record high surges, as you said. I think in the beginning of the year, it was definitely driven by international interest rate expectations. And then as the year carried on, we've had a lot of news flow on the geopolitical tensions, and I think once that happens, you have safe haven demand, and that goes straight into gold. So in the short term, I think gold is going to remain elevated, but I don't think that's going to translate into actual changes in the mining sector. I think it's faced with a whole bunch of other challenges itself, one of them being regulations. But we know that mines are struggling financially. They are closing down. Yes.
Gold mines are struggling in South Africa.
Yes.
Wow.
The whole country is struggling.
No, but like gold's prices being so high, surely all hands to the pumps and just get more gold out.
We can't get it to the ports because the road network and the rail network. No, seriously. But
No, that is true. That's why it's one of the really important
No, gold's
reforms
not that
we need.
heavy. You just need a few kilos, and
But if I can come back to one point on terms of the African context, South Africa has really been a leader in terms of showing how a well-developed financial system can promote growth. And again, I'm not talking about where we are right now, but I'm talking about over a long period of time. And this is really where my company operates, is in the African space, and we're dealing with over 1,000 banks. I mean, the typical African country outside South Africa has anywhere between 40 and 60 banks. How many do we have? 4.5? Investec's like half a bank, aren't they, or whatever? But so we're pretty much on the ground, and I think a great challenge for growth. I mean, the International Monetary Fund, in a famous paper many years ago, they said that countries with well-developed financial systems grow faster. So a big opportunity is to develop the financial systems of the continent. And I've been here now over 30 years in Africa, and I'm very disappointed. Outside South Africa, financial markets are very, very underdeveloped, and it causes all sorts of issues in terms of capital flows. Malawi, for example, one of the poorest countries in the world, they have no foreign investment into their financial markets. They have zero purchases of their shares, of their bonds, etc. And it's because of a number of issues. You can't put it down to one or two factors, but market infrastructure development. One of the things I'm interested, by the way, on a different note, is talking to various providers here today of retail trading solutions. Are any of you here who are interested in trading FX able, through any of these providers, to trade any of the African currencies? It's indicative, isn't it? There's not a single provider, and I searched about 20, obviously ATFX being one of the biggest, but I searched down to about the top 20, and I couldn't find a single CFD available on the Naira, the shilling, the Kenyan shilling, the Egyptian pound. Not a single CFD. But again, that's conflating two different issues. But for me, a big opportunity for Africa is to get its financial markets out of the 1970s into the present time. I really do see that as a major opportunity. And there has been progress in many countries, but there's still a massive work to be done.
Yeah, you know, at ATFX, of course, we're working on it. We're working on, maybe by next conference in a year, we'll have some of these African currencies as a CFD. But currently, we provide, of course, the Rand pricing from our London office into a lot of the participants globally. But yeah, it's a good point. We should do the...
Okay, may I ask Peter a follow-up question?
Yeah, go for it.
I just wanted to ask, when you're saying the financial industry or that financial institutions in the African continent needs to be developed, what are you talking about? Because can small change do a lot, or is it like a complete overhaul?
I think that there has to be a change in the regulatory stance. The problem in Africa, and again I'm being general, but you can really be general. You know, there's a famous quote from the International Monetary Fund that once you go north of the Limpopo River, financial market sophistication is really not available. The most basic instrument in the FX market is the spot foreign exchange deal. Many of you know what I mean by spot FX. I agree to buy dollars, sell Rand today, and that deal will exchange the cash flows, we say settle in 2 business days' time. That market doesn't exist in Kenya right now. Kenya is one of the biggest economies on the continent. There is no visible, transparent market for buying and selling dollars against the Kenyan shilling for trade transactions. You can't speculate in Kenya, it's not permitted. I mean, that's just indicative of where we're at. So when we talk about cross-currency swaps, and we talk about options, and we talk about exotics, and we talk about all of the other array of instruments that we find in South Africa, we find in London or Tokyo, we just don't see them. And the problem is not the people, because most of the senior people working in those banks in Nairobi and Dar es Salaam and Accra, they've got international experience and credentials. It's the regulators that don't permit that development. It's quite, that's the real key, is changing that regulatory stance.
Quite shocking, actually, yeah.
No, I'm glad you mentioned Kenya, actually, because they are one of the success stories for structural reform about having mobile access and having financial access on your mobile, but that doesn't necessarily translate into trading.
Yeah, the retail side with M-Pesa, for example, but the wholesale side, woeful. And it's regulatory pressure. You know, I do workshops online and face-to-face, and have been for the last 30 years across Africa. We'll go to Nairobi. We won't have any delegates from the central bank attend.
Maybe that's why, because of all these currency issues across Africa, people are turning to Bitcoin and these things. So, you know, if this continues, then other currencies, digital currencies will show up, and people will just say, you know what, I'm just going to trade that against dollars or whatever and exchange money. I know there's USDT and all these other things coming up.
Yeah, I mean, the key is this really, from an FX perspective, is that international investors, and we need international investors, not just foreign direct investment, but investment in our capital markets. They won't go into a market unless they know they can get out. There's an old saying that when you invest in Africa, you get welcomed through a huge, big open gate. But when you try and exit, you're fighting to get out of a small window in a bathroom. And this is the problem, that you will go into Malawi, Nigeria, but you won't be able to then take your money back out because of sheer lack of liquidity. And that deters so much investment in those countries that in turn will make the markets more attractive, the pricing will be better, the markets will be more liquid, and so on. It's a virtuous circle.
From that perspective, which countries are your favorites, Shannon, that are like not so...
I will always be proudly South African, even if it's dire.
Other than South Africa,
No,
which countries are you positive on, Shannon?
In Africa?
In Africa. Where you would say, okay, ATFX, go and open an office, it's going to happen, the next 10 years, that's the place.
I actually have no opinion on those. I don't think I should offer one.
I think a lot of the countries that have come through problems, like Zambia, have restructured their debt with international creditors. They've turned the corner. Ghana, the same. Mozambique, huge discovery of natural resources there, particularly gas. I think Hormoz, you were telling me, or someone was telling me the other day that Mozambique is forecast to be the fastest growing country in the world this year.
Yeah, Mozambique, I saw some stats and it looks really good. I'd love to go and see the place, but it's it's coming from a low-level GDP, of course, but it's growing fast. Mozambique, it's your neighboring country. Have you guys ever been there? None of you go there?
Many times. It's absolutely beautiful. It's almost as beautiful as South Africa.
I wish.
Mozambique, okay, almost as beautiful. So maybe Mozambique, Zambia, yeah. Of course, the big ones, Kenya, Nigeria. So we covered that. How about euro and dollar? Any views on that? Shannon, euro, dollar?
Euro, dollar, yeah. So again, it goes back to the global monetary policy cycle. So in the beginning of the year, we thought the Fed was going to ease policy rates first. Now it's looking more like the the ECB is going to be easing soon now in June. We're not expecting back-to-back easing over there. And the dollar is going to remain strong until there's movements over there. If we look at it locally and what that means for our inflation outlook and our interest rate policy outlook, I think on the one end we have our central bank looking to target inflation lower. So currently we have a 3 to 6% target band, and they are wanting to bring that lower. So that would almost argue for higher interest rates for longer. And at the same time, we are looking at a consumer that's under an immense amount of pressure that needs to have inflation, interest rates coming down. So you've got these two forces fighting each other in our market.
We need both inflation to come down and interest rates to come down. Needs a miracle, that one. What's your thoughts?
I think, as Bismarck, the German Chancellor, once said, the greater issues of the day will be decided by blood and iron. I think there's a huge potential peace dividend for Europe. Europe has been in trouble for a long time. There's lots of contradictions in those economies. To talk about Europe as one homogeneous mass, they're not. Economically, there's big divides, as we know, between the fringe countries, Portugal, Greece, etc., and the anchors, Germany. But huge issues, aging populations, which is a problem in the West, and a number of other but I think there's a huge peace dividend, or the opposite, from developments in the battlefields of Europe. I cannot believe in 2024 I'm looking at my continent and I'm seeing a Second World War fight going on that's killing thousands daily. Okay, there's lots of conflict elsewhere that I disagree with all conflict, but to see it in what was the bastion, supposedly, of whatever we understand by Western civilization is just, I can't fathom it. So there's a huge peace dividend there, or conversely, if things escalate, I don't see much happening on the growth side in Europe, quite frankly.
Yeah, you think the Ukraine war is going to escalate, basically?
I hope not, but I think, I don't see what resolution is going to come about anytime soon, but I pray for it.
we might as well then jump to the geopolitics on this stuff. What's your thoughts on the geopolitics here or globally? Anything here in Africa? No politics here?
Well, again, it's just an example of South Africa could have benefited from geopolitical issues rising, with ships having to come past the Cape of Good Hope because of the Suez Canal issues, and we were unable to benefit from those because of our port issues. And then again, our regional partners that we are supposed to be trading partners with are benefiting on behalf of us. So I think that's one of the worst things. I think the oil price has surprisingly not been moving a lot with the geopolitical risks of late, but there's always a risk that it could shoot up to, I don't know, past $100 a barrel or something like that.
And that's bad, right?
That would be bad. Well, yeah, that would just be bad. Let's just call it bad.
Well, maybe not for us in Dubai, but yeah.
I was just about to say, for us.
Well, Dubai, you haven't got any oil though, have you? It's Abu Dhabi, your neighbour.
Abu Dhabi, our neighbour, yeah.
But it'd be good for some country. Angola, obviously, Nigeria, 7th biggest producer of oil in the world. But for the majority of us as oil importers, certainly not positive.
And on the geopolitical aspects, how about globally?
Yeah, we were talking, if I can just jump in there, Hormoz, we were talking the other day online, and I'm based here in Johannesburg, as you know. Hormoz is from Dubai, and we were talking about the happiest countries in the world to live in index. I don't know if you guys saw this. It came out a couple of months ago. Every year they interview a number of people in all of the major countries in the world, and then they say which is the happiest country to live in.
It's not South Africa?
South Africa was 83 in the latest survey, but number one, out of over 100 countries, but number one for the 7th year in succession was, the happiest country in the world was Finland. Finland, one of the coldest countries in the world. And in fact, in the top 10, with one exception, they were all the coldest countries in the world. And it always amazes me. A lot of my friends say they think they might one day have to emigrate, but they don't want to, and they've heard horrible stories about English weather, etc., etc. And yet I find it ironic that the happiest countries, however much you believe in the validity of that survey, the happiest countries in the world are the coldest.
Was Australia and New Zealand there?
They were up there as well.
Not that cold.
They were up there, but no, but they weren't in the top, they were, I think, like 9, 10 maybe, or 11, 12 around. United States, I think, was 26th happiest country in the world to live in. The place that I spent a lot of time in, Canada, also freezing, 15th, not bad. There wasn't a single African country in the top 50.
So just to come back to, so oil prices, sure, going over 100 would be bad, but we've also seen, and we've spoken about gold already, but it is a safe haven demand in times of geopolitical risks coming up and increasing, and that is beneficial. So we've got a trade-off between it's beneficial for growth, possibly even the rand, where it's got a negative impact on inflation and monetary policy.
So basically you're saying Peter shouldn't be too worried about Ukraine war escalating, because that might mean gold prices goes up, which is not too bad for African countries. Well, basically, don't worry, Peter.
Depends what you're trading.
I remember watching The Simpsons many, many years ago when global warming was first being talked about. And he said, no, don't worry. He said, global warming will be cancelled out by nuclear winter. I'm wondering if I'm not conflating things again. Hormoz, I'm dying for you to ask the last question.
Yeah, I've got a question about day trading, and what's your thoughts on all this with day trading and retail traders speculating, and this is all, you've been in that. I don't know, are you participating at all in that segment?
When it first when it first kicked off, I opened a retail FX trading account, and after 1 week I took 20% out. The 20% that was left. No, I do not advocate, nor do we work with people involved in the business of day trading. Well, day trading is one style, but retail participation in FX. In 2008, I wrote the 3rd edition and edited the 3rd edition of the South African Financial Markets textbook. And in the opening chapter, I talked about what's new in the zoo in financial markets. And that was really around the time of the emergence of the retail participant, the butcher, the baker, and the candlestick maker, trading dollar-yen online, using candlesticks and Bollinger Bands and all of that stuff. And I quoted a study, very prestigious, very influential study by the AITE group in the United States. And they'd investigated the market and the success of these individuals. And they basically concluded, they said, day trading is not investing, it's gambling. If you want to gamble, go to the casino, they give you free food. And that's still my starting point and departure point here, is that having worked in London on Wall Street, in the South African banks, I set up derivative desks for all of the major banks in South Africa when I arrived here in the 90s. That trading is not for the man or woman in the street. And you could say, well, let's give you, I heard earlier on one of the other speakers on a previous presentation, the importance of education. Yes, education in terms of risk management will help you lose less money. But to beat the markets at home using software that's available to everyone. I mean, I've never in my life met a rich technical analyst. These people that purvey these systems of support and Elliott Wave and GAN and all of that, it's pseudoscience, ladies and gentlemen, and I've never met a rich person who's actually selling that stuff. Why are they selling it? If I found out a way to beat the markets, and don't forget, there are people who consistently beat the markets. I'm not one of them. In my whole career, spanning 3 decades and 3 continents, I met one. We call them the market wizards, and that's a great book that you should all buy a copy of, Volume 1, The Market Wizards. Interviews with the top traders. They do exist. Jim Simons. Has anyone ever heard of Jim Simons and his Renaissance fund? Jim passed away recently, possibly the most successful of these traders of all time. No flash in the pan. 64% return per annum over 40 years. On average, in dollars. That's not a fluke.
Yeah, he was exceptional, yes.
He was exceptional.
But there are some, we do see them. We have hundreds of thousands of clients, and we see amongst them, you're right, there's
you see
a
one
minority.
Or two.
Yeah. There are quite a few good traders out there.
There are indeed, but I think, studies have shown 80% plus of retail traders lose all of their money in a couple of weeks. Why is that? Is it because they're not as clever as the Wall Street wholesale money? We talk about the dumb money. We're dumb money when we trade our own money, aren't we? We don't have the capital behind us. We have very short stop losses. We're using massive leverage. I mean, I was looking at some of the providers, 500 to 1 leverage, 1,000 to 1 leverage. That's insanity. No self-respecting in South Africa. When we market hedge funds to manage your money into the retail space, maximum leverage 2 to 1. But here we're offering ridiculous leverage with limited capital resources, limited information. Trust me, the real information you're not going to access.
Yeah, I think in the previous panel, actually the country heads, our own Linton was saying that it's very important to educate people to know what they're doing. They shouldn't touch this stuff before they get education and they know what they're getting into, and so which is something we're doing a lot of. And actually, we only have a couple of minutes left, so I wanted to see if there is any. There's going to be some questions, I think. So we got one there, one there. If we can get the microphone. So put your hands up with the questions. There's 1 and 2.
Hi, good afternoon, everyone. And thank you so much for such insightful information to the panelists. I've got a question directly to Peter. You were sounding very skeptical when you were talking about the South African rand, so my question goes directly to you. What do you think about the South African depreciation of the rand in the next couple of months, or probably going to a year? And what will be your projections looking at the South African rand, and obviously looking at the current instability, like political instability, economic instability, and a whole lot of stuff surrounding the South African economy? What would be your projections looking at the South African rand and the depreciation altogether? Thank you.
Thank you.
I would say if I had to make a forecast, and you can quote me on this one, put this in your diaries. I'll make a forecast where the rand will be in December. My company, for our clients every year, we give away a case, 12 bottles of Veuve Clicquot champagne to any one of our clients who can forecast most closely the dollar-rand exchange rate on Christmas Eve. I'll make you a forecast for Christmas Eve or whatever the last trading day is before Christmas this year. Dollar-rand will be somewhere between 14.2 and 29.8. And you people
I think you're going to be wrong.
Oh, hang on, with a 99% confidence interval. Those of you
Spoken like an economist.
Those of you who know, but this, I'm speaking like a risk manager. The modern world of risk management is confidence levels. If you want to be 100% confident where the rand will be in December, you've got to go from 0 to infinity. So I'm being 99% confident. So there's a 1% chance it could be outside that range. And this goes to the heart of risk management, is that when you hear people make predictions, you've got to wonder what they're smoking. Because it's been proven time and time again that forecasting doesn't work in financial markets. It doesn't. We all want to find that holy grail that will make us rich. I look at the average age here and I see a lot of very young people, very dynamic looking people. And many of you here to find that holy grail. I've been looking for it for the last 61 years. If you find it, call me. Let's talk
We'll
before
find it.
you
We're
tell
going to
anyone.
find it. We had another question there, I think, quickly.
Hello, my name is Matavat. I want to, as you know, the hedge fund industry in Africa is relatively small compared to North America. So you touched on Jim Simons, there's Ken Griffin, and there's Ray Dalio. So do you think Africans in the next 10 to 20 years can outperform these guys? I mean, do you think
not?
Africans can outperform these
I
guys
think
in
so.
the next maybe 10 to 20 years?
I think they can, for sure.
You mean in terms of investing or trading African assets?
Like there could even be now that there could be hedge funds that are performing very well here, right? There could be.
There have been, in South Africa. The problem again is regulation, and the issue as well, you ask any hedge fund what's the most important thing for them to want to trade a market, they'll tell you liquidity. And that's the problem. If you're going to try and trade, first you're not going to be allowed to speculate anyway. With leverage, definitely not. And the liquidity of being able to go and buy some shares on the Dar es Salaam Stock Exchange today, try and sell them tomorrow. So in terms of African hedge funds operating locally in African markets, no. I don't see that happening anytime soon until those markets develop. Short selling, you all know what short selling is. Every time you sell dollars against the rand, you're short selling. Africa, apart from South Africa, there's not a single economy or jurisdiction that allows that to happen. Hedge funds go long and short. So now you've got to be in a UFC fight with one arm tied behind your back. You're going to lose. So no, I don't see it happening.
Yeah. So we've run out of time, unfortunately. So you can discuss perhaps after this with these guys. I really enjoyed this panel. Thank you so much.
Thank you.
Thank you very much.
Thank you. Thanks, everyone.